You wake up Monday morning, and instead of that familiar knot in your stomach about money, you feel calm. Your bills are paid, your savings account is growing. You have a plan that works. This isn't fantasy. This is reality for millions of people who discovered 5 simple pillars that changed everything. If you're tired of living paycheck to paycheck, if you're sick of watching dreams slip away because money disappears, this video is for you. Today, I'm sharing the exact 5 pillars that people just like you use to break free from debt and build real wealth. These aren't get-rich-quick schemes. These are simple, proven principles that work for teachers, nurses, mechanics, and anyone ready to take control of their financial future. Here's something shocking. 97% of Americans have financial goals for 2025, but 90% face obstacles preventing them from reaching those goals. The average American scores only 46% on basic financial literacy tests. Financial illiteracy costs the average person over $1,000 every year. But here's good news. You don't need a finance degree to build wealth. You just need to understand and apply these 5 fundamental pillars. The first pillar is the foundation of everything else. It's about changing how you think about money. Most people struggle with what experts call a scarcity mindset. They believe money is limited, that wealth is only for other people, and that they're not worthy of financial success. Your money mindset is your unique set of beliefs about money. It drives every decision you make. Where does your money mindset come from? It starts in childhood. How your parents talked about money shaped your early attitudes. If you heard, money doesn't grow on trees, those messages stuck with you. But here's the truth. You can reprogram your money mindset. You can choose new beliefs that serve you better. First step is awareness. Pay attention to your thoughts about money. When you see someone driving a nice car, what do you think? Next, challenge limiting beliefs. If you think, I'll never have enough money, ask yourself, is that really true? Often these beliefs are just old programming, not facts. Then, replace limiting beliefs with empowering ones. Instead of money is hard to come by, try money flows to me in large amounts. One powerful way to shift your mindset is through visualization. Spend a few minutes each day imagining your ideal financial future. See yourself debt-free. Another technique is gratitude. Every day, write down 3 things you're grateful for about your current financial situation. This shifts your focus from scarcity to abundance. Remember, your behavior follows your beliefs. When you truly believe financial success is possible, you'll start making decisions that support that belief. The second pillar is about building wealth through small, consistent daily actions. Wealth isn't built through one big decision. It's built through hundreds of small decisions made every single day. Research shows that millionaires share common daily practices. These same habits work for anyone willing to apply them consistently. Habit 1. Control your spending. Awareness is power. Know exactly where your money goes. Ask before every purchase, is this moving me closer to my goals or further away? Every dollar you spend is a dollar you can invest. Every unnecessary purchase steals from your future self. Track your spending for 1 week. That daily coffee might seem harmless, but $5 a day is $1,825 a year. That's money that could be working for you instead. Habit 2. Pay your bills on time. Paying bills on time saves money by avoiding late fees, protects your credit score, and builds financial responsibility. Set up automatic payments for all fixed expenses. This removes the mental burden and ensures you never miss a payment. The average American pays over $200 yearly in late fees. That's money that could be earning interest in your savings instead. Habit 3. Save money every month. Wealthy people pay themselves first. Before they pay any other bill, they save a portion of their income. Start with whatever percentage you can manage. Even 1% is better than nothing. And gradually increase your savings rate. Automate this process. Set up an automatic transfer from checking to savings on payday. Start with whatever amount you can manage, even $25. Habit 4. Study money for 30 minutes every day. While most people spend 30 minutes scrolling social media, wealthy people spend that time learning about money. Read financial books, listen to finance podcasts, and watch educational videos. Knowledge is the foundation of wealth. Start with just 15 minutes a day. After 1 year, you'll know more about money than 90% of the population. Habit 5. Invest your money, even small amounts. Even if you can only invest $25 a month, do it. Consistency matters more than the amount. Start by investing a small amount monthly in a simple index fund. Never stop investing, even during tough months. A $25 monthly investment earning 7% annually becomes over $65,000 in 30 years. Many brokerages allow you to start with no minimum balance. You can invest in low-cost index funds that give exposure to hundreds of companies. The key is to start now. Time is your greatest asset when it comes to building wealth. The third pillar is about creating money that works for you while you sleep. While most people trade time for money, wealthy people create systems that generate income without their constant involvement. Passive income is money you earn without actively working for it. It's rental income from property, dividends from stocks, or interest from savings. It's income that flows whether you're working, sleeping, or on vacation. Building passive income requires upfront investment of either money, time, or both. But once you've made that initial investment, passive income can pay off for years. Start with the simplest form of passive income, interest from savings. Move your emergency fund from a traditional savings account earning 0.1% to a high-yield savings account earning over 4%. If you have $10,000 in savings, the difference between 0.1% and 4% is $390 per year. That's passive income with zero risk. Once you have your emergency fund established, start investing in dividend-paying stocks. These are shares of companies that regularly distribute profits to shareholders. When you buy dividend stocks, you become part owner of profitable businesses. Companies like Coca-Cola and Microsoft have been paying dividends for decades. They send you a check every quarter just for owning their stock. If you invest $10,000 in dividend stocks with a 3% yield, you'll receive $300 per year in dividend payments. Start with dividend-focused index funds, which give you exposure to hundreds of dividend-paying companies with a single investment. If you want real estate exposure without dealing with tenants or repairs, consider real estate investment trusts, or REITs. Real estate investment trusts are companies that own and operate income-producing real estate. When you buy REIT shares, you're buying a piece of a large real estate portfolio. REITs must distribute at least 90% of taxable income to shareholders as dividends. They typically pay higher dividends than regular stocks, often 3% to 6% range. Don't spend your dividend and interest payments. Instead, reinvest them to buy more shares, which generate more dividends. This is compound growth, and it's how people build extraordinary wealth. Let's say you invest $500 per month in dividend stocks, earning 7% annually. After 10 years, you'd have about $87,000. That $87,000 would generate about $6,000 per year in dividends, or $500 per month. After 20 years, your investments would be worth over $260,000 and generating over $18,000 per year in passive income. You can start small. Many brokerages allow you to invest with no minimum balance. Start by investing just $100 per month in a dividend index fund. The fourth pillar is about never stopping your financial education. This might be the most overlooked aspect of building wealth. The average American scores only 46% on a basic financial literacy quiz. Most people make financial decisions with less than half the knowledge they need. This costs the average person over $1,000 yearly. Only 29% of Americans took a personal finance course in high school. We're expected to make complex financial decisions without ever being taught the basics. Start with just 15 minutes a day. While others scroll through social media, read financial articles. During your commute, listen to personal finance podcasts. Focus on one topic at a time. First, learn about budgeting and debt elimination. Then study emergency funds and saving strategies. Next comes investing basics. After 6 months, you'll understand more about money than most college graduates. After a year, you'll be making financial decisions with confidence. Focus on resources from credible sources rather than get-rich-quick gurus. For ongoing education, subscribe to reputable financial publications and follow certified financial planners. The most valuable benefit of financial education is the confidence it gives you. You'll no longer feel intimidated by financial advisors or overwhelmed by investment options. This confidence will protect you from making emotional decisions during market downturns. When the market crashes, you'll understand that volatility is normal and temporary. The fifth pillar is about having the patience and discipline to stick with your plan, even when results seem slow. Building wealth is not about timing the market. It's about time in the market and consistent action over decades. Building wealth is the adult version of the marshmallow test. Every day, you're choosing between immediate gratification and long-term rewards. Learn to ask yourself before every purchase, is this moving me closer to my financial goals or further away? Time is your most powerful ally, but only if you give it a chance to work. When you start investing $200 per month at age 35, assuming a 7% annual return, your investment would grow to over $525,000 by age 65. Most growth happens in the later years. After 10 years, you would have about $35,000. After 20 years, about $98,000. But in the final 10 years, your account would grow from $98,000 to over $525,000. This is why patience is critical. The biggest rewards come to those who stay invested and let compound growth work. Your patience will be tested during major market downturns. You'll watch your investment account lose 30% of its value in just months. But if you've educated yourself about market history, you'll know that downturns are normal and temporary. You'll understand that the worst thing you can do is sell when investments are down. Instead of panicking, see downturns as opportunities. Continue your monthly investments, buying more shares at lower prices. Build systems that make disciplined behavior automatic. Automate your investments so the money is invested before you can spend it. Set up separate savings accounts for different goals. These systems remove the need for constant decision-making and make it easier to stay disciplined. After years of consistent investing and disciplined living, your patience will pay off visibly. Your investment account will grow substantially. Monthly dividends and interest will become meaningful amounts. When your car needs major repairs, you'll afford to fix it without debt. When you want a special vacation, you'll pay cash without derailing your financial plan. This is the true reward of patience and discipline. It's about having options, security, and freedom to make choices based on what you want rather than what you can afford. There you have it, the 5 fundamental pillars that people use to get out of debt and build wealth. These aren't complicated strategies requiring special skills. They're simple principles anyone can apply. The question isn't whether these principles work. The question is whether you'll apply them consistently. You don't need to be perfect. Start with one pillar, master it, then move to the next. Small, consistent actions compound into life-changing results. If this video helped you, please give it a thumbs up and subscribe to the channel. Share this video with someone who needs to hear this message. Leave a comment below telling me which pillar you're going to focus on first. Your financial freedom journey starts with a single step. Take that step today.